Sometimes that's all it takes. Just one little confirmation, and boom, a massive ripple goes straight across the global markets. So today, we're going to break down exactly how a single political headline can connect directly to your portfolio and what it might be signaling for the future. Let's dive right in.
And this was it. This was the headline that flashed across trading terminals everywhere and just set everything off. It's kind of crazy, right? The simple fact that President Trump and President Xi were going to meet was enough to trigger this huge wave of optimism. So let's get into the why. Why did this happen? And I mean, the impact was immediate. Just look at that number. South Korea's main stock index, the Kospi, it didn't just get a little bump. No, it surged a full 2% to hit a record high. We're not talking about a minor tremor here. This was a full-on market earthquake. Okay, so what was the actual catalyst? What was the spark? Well, it was the White House coming out and confirming that yes, Trump and Xi were definitely going to meet at the APEC summit. And you have to understand, in the middle of these really high-stakes trade wars, an announcement like this, it's seen as a major step toward cooling things down. And right, here's the absolute core of it. This meeting was like a potential off-ramp for a trade dispute that just kept escalating. For months, investors were just totally on edge, right? Worried about tariffs, about restrictions. This was the first real sign of a thaw, a little bit of sunshine, and the markets, they reacted instantly to even just the chance of things getting better. So this wave of good feeling, it wasn't just locked down in one country. Not at all. Let's actually dig into the hard numbers now and see just how far this ripple effect really spread across all of Asia. Yeah, this table pretty much tells the whole story. It wasn't just South Korea having a great day. You look over at China, and its big CSI 300 index was up. Hong Kong's tech index, that jumped 1.5%. And then there's Japan's Nikkei, up over 1% too. I mean, this was a rally across the board, and it was all kicked off by that one single piece of news. Okay, but here's where it gets really interesting. Check out where the money was flowing the most aggressively. Sure, the whole market was up, but the tech sector, man, it saw some truly explosive gains. Just look at SK Hynix, a massive 6% jump. What does that tell you? It tells you investors felt these critical semiconductor companies were getting hit the hardest by all the trade tension. And it's worth pointing out, too, that over in Japan, the rally kind of had a second engine. The trade news gave it a huge boost, for sure. But at the same time, there was all this talk about a major stimulus package from the new prime minister. So that just, added even more fuel to the fire. So that really begs the question, right? Why tech? Why did tech stocks, and especially those semiconductor stocks, react so powerfully? Let's trace that chain of confidence step by step. It's actually a pretty simple but really powerful chain reaction. First, you get the political signal. The meeting is on. That instantly lowers the perceived risk for these key industries. And when risk goes down, confidence goes up. That renewed confidence leads straight to investors buying, which pushes prices higher. I mean, if your whole business depends on global exports, any hint that the risk is easing, well, that's just a massive green light. And yeah, these are the sectors that are right there on the front lines. We've been talking a lot about semiconductors, but think about rare earths, too. These are the critical materials that go into, well, everything, from our smartphones to military gear. They've been at the very center of this whole dispute. So any kind of truce directly changes their outlook. That's why you see traders keeping a close eye on related ETFs. Those are just funds that bundle these kinds of commodities together. All right, so let's bring this home. What does all this mean for you, for someone trying to figure out how to navigate these markets? Let's take a look at a potential investment playbook that kind of comes out of all this. So the thinking really breaks down into two different time frames. In the short term, one idea is to get some exposure to that potential tech rebound, but maybe you'd also hedge with commodities, just in case the talks go south. But the long-term strategy, that's more about patience. It's about watching for real policy changes, like seeing if they actually roll back tariffs. And of course, keeping an eye on other big drivers, like that stimulus package in Japan. But really, in either case, the big takeaway is to stay diversified. And this is so important to remember. None of this happens in a vacuum, right? The Trump-Xi meeting is obviously the big story of the day. But at the same time, all eyes are on the U.S. inflation data. That number is going to heavily influence what the Federal Reserve does next with interest rates. And that decision, wow, it could either pour gasoline on this rally or stop it completely dead in its tracks. Okay, so let's just pull back for one last look at the big picture.
What we really got here is this one really powerful positive signal, this potential de escalation. But it's happening against a backdrop of some serious uncertainty, with some really big economic data points still on the horizon. And that, my friends, leaves us with the billion-dollar question. This one announcement absolutely sparked a fire. But with so much on the line, with tariffs and the future of tech hanging in the balance, is one single meeting really going to be enough to turn this spark into a rally that can actually last? That is what every single investor is watching right now. Thanks for digging into this with us.